Boeing has problems, but the stock has fallen way too much. Investors have exaggerated Boeing's financial problems, and the company's stable cash position will allow it to weather this economic turmoil. Fundamentally, Boeing has a very valuable business in an industry that will roar back to life after the pandemic is over. Monday, Boeing stock dropped 9%. Why? But because there's actually no new news out today that would explain the stock's sudden fall. Not an earnings warning, or an analyst downgrade, or even a reduction in price target has been announced, nothing at all. Rather, what's dragging Boeing down today appears to be a simple equal and opposite reaction to the stock's recent resurgence in price. Over the past 10 days, you see, Boeing shares have enjoyed a remarkable comeback, soaring 66% on hopes that the company would win a big cash bonanza from the government's planned CARES Act. The government did in fact finally come through with the relief package, but in a pretty clear example of buy the rumor, sell the news, investors today are taking their profits and selling off Boeing stock. With the latest data showing that airlines have grounded more than 8,500 planes, we think it is likely that a large number of old planes do not return to passenger service. Stallard is still cautious on Boeing shares, rating them hold with a $124 price target. He prefers companies with more defense exposure, including General Dynamics, GD, Lockheed Martin, LMT, and Northrop Grumman, NOC. Boeing and its European peer Airbus, Air France, publish long-term demand forecasts. Boeing's peer sees a global need for more than 39,000 new jets over the next 20 years. The global fleet is about 22,000 jets and would rise to about 45,000 jets over the forecast period. The difference between the 23,000 fleet increase and the 39,000 deliveries is plane retirements. Boeing is more bullish than Airbus, expecting about 44,000 deliveries over a similar span. Important to note is that despite my analysis pointing out that Boeing will be able to survive and continue to be a strong company over the long term, there are several threats that may affect the returns for investors. First, while Boeing has $15 billion in cash and tens of billions more available to it through Treasury loans and its credit facility, a sustained weak operating climate may eventually force the company to take drastic action that hurts shareholders. In the same CNBC interview, CEO Calhoun pointed out that while he is still confident, the timeframe for this COVID-19 crisis is important. We can still find our way to the other side. Now, if it goes on for 8 months, probably not. This statement is important because if Boeing cannot find options in the debt markets, it may have to turn to less appealing options such as equity financing, something it wants to avoid and will certainly hurt its existing shareholders. Thank you for your time and I'll see you in the next video.